everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scouten. Jumping into the charts on this Thursday, August 4th, 2022. Overall, it has been pretty much a pause day for the markets. There's been a little bit of choppy price action. Certain stocks have been up, certain stocks have been down. Once again, the volume today is very peanuts, small amount of volume being traded. Therefore, that does still flavor a potential float up, and it's easier to prop the markets up, especially for retail traders, as the volume is substantially light. But just a little bit of intraday analysis first on the S&P 500 here. This will be a little bit of education. You can see that we were trading in this wedge pattern from this pivot to this pivot to these pivots over here. You broke out of this wedge pattern. It looked like it was going to hold that breakout and potentially confirm, which would have caused you to test this topping tail. And the interesting thing is that the pre-market action today, you had a topping tail. So right off the hop, you have failed to make a new high on the day. And you do have an interesting topping tail in effect here, as well as yesterday's reversal candle over here. So these two intraday topping tails are still holding true. But the interesting thing about this wedge pattern is that it looked like you were breaking out, and now you have failed to confirm. And the thing about failed breakout moves is often when you have a failed breakout, the biggest move in the opposite direction comes thereafter. So this is arguably now a 1, 2, 3, 4 bar surge, failed breakout because you failed to confirm above the wedge. And now look what is happening, a late day spider sell. And it'll be interesting to see how far the sell-off does take us down. You'll have some initial support at this pivot over here around the 413 level, which we're approaching right now. But ultimately, I do think you're going to head lower and come and test this gap around the 408. So let's just keep this failed breakout in mind. You're still stuck in this wedge at support. But since you failed to break out, I do think we see a little bit more downside over the coming days. Let me just erase these wedge pattern lines just so we can look at the daily chart. So if we look at the daily chart of the S&P 500, really not too much has changed. The S&P right now is slightly down, but relatively flat on the session. So overall, it has been a pause day for the indices. We're still in this huge resistance zone. So I do think we're going to see some similar price action where you potentially will need to consolidate for several days in order for us to continue to see a strong power move up. That being said, I'm in the camp these markets are on borrowed time, and I do think we have a downside move coming sooner rather than later, but that doesn't stop the fact that if you get some bullish consolidation, which right now this technically is bullish consolidation, then it will eventually favor a move up to the upside. But these markets can break down pretty quickly and pretty hard at any given point. So we do have a bunch of earnings after the bell, lots of household names, lots of meme crowds. You arguably have many of the meme stops like Lyft, Chegg, Dash, Expedia, Carvana, Fubo, AMC, Redfin, Twilio, Vertex is one that we're in. That's not a meme stock, it's a pharmaceutical, but a variety of household names are reporting earnings. If we take a look at the NASDAQ QQQ, overall the NASDAQ is slightly up on the day, up 0.23% as we speak. You are into this downsloping channel of resistance on an extended move to the upside, so naturally a hit off of this resistance and then a pullback should naturally be expected. And what I'm kind of thinking is we get a pullback at the very minimum to this previous pivot over here on the 313, 314 level, and that'll also be a technical daily gap fill. And then we'll have to reassess whether or not we start holding this upper term sloping trend line. So let's continue to monitor those indexes. If we flip to gold, I think gold has had the best powerful move today, completely negating this reversal signal over here. So what a powerful move in gold. Gold is rallied up 1.57%. So that is beautiful for our GLD. We are slightly in the money now, but I do want to see gold continue to make a move. Now, that being said, gold is running into resistance. You can naturally see this pivot over here, and then all of these pivots across here around this 1808 level, which will also coincide with this downsloping symmetrical channel. So gold should have some major resistance up ahead. I do think it may need a week or potentially two to inevitably consolidate before breaking higher. If we look at the DXY and why gold also got such a big move, simply just basically an inverse move of each other. A massive down day on the dollar equals a big move in gold. So just keep that in mind. Let's take a look at the US 10-year. Yields haven't really done much, but you're still trading below that neckline now. Now you're still technically holding this bullish reversal candle. So again, I think Friday's weekly candle is going to be pivotal. Are we going to close above this closing low last week, or are we going to close below? If we close below, we get a secondary weekly confirmation of this breakdown. If we close above, we have not confirmed on a weekly basis just yet. So very, very pivotal price action as we head into the end of the week tomorrow. So let's take a look at Bitcoin. Bitcoin is slowly seeing some downside pressure. You've had now 1, 2, 3, 4, 5, 6, 7 days of selling, light selling in a row. And now it seems to be you're threatening this bullish consolidation because you are trading below this wick. The big question is in 4 hours, what type of close? Is it going to be below this wick over here, or is it going to be above? If it's below this wick on a close, then that will start creeping into the probabilities that a move down in Bitcoin is more likely. And if you still see Bitcoin's major macro pattern is down, you have had a multi-week consolidation over here, which we've played numerous times. And I do think Bitcoin will eventually see its next down leg, which should coincide with the indices. And one could argue that if we start seeing Bitcoin fall before the major indices, that should be your leading indicator that it is switching to more of a risk on environment, which will certainly not favor the tech stocks and the major things that we are shorting. Let's take a look at Coinbase. I want to show you an interesting, so congratulations on the Coinbase trade. We netted a beautiful double-digit gain. I think it was 14-15% in a matter of 25 minutes. So this is the notorious thing as to why you should not be buying into news. Coinbase popped, had this massive move up from basically all the way over here at $81, gapped all the way up and started pumping all the way to a high of around 116 and change. You fill the key technical gap fill here. You also fill the key technical gap fill here. Ran into some key resistance. We shorted, issued an alert at the 113 level, so not the exact high, but pretty darn close. And look at this reversal. Coinbase has almost given back all of its gains. This nasty candle formation is not what you want to see when there's such positive news where BlackRock has now partnered with Coinbase to potentially offer their clients crypto. So a perfect example of sell the news, and certainly we were paid handsomely. I issued this as a swing trade. I played it as a swing trade in my personal account. I played it as a day trade, and I netted an extreme amount of profits in such a short period of time. So when God gives you a gift like this, you got to certainly jump on it, and it's beautiful to see the price action of Coinbase over there. Let's take a look at oil. Sorry, not the wrong chart. Let's take a look at oil, the WTI. So we actually covered our oil short today. We sold our SEO. Again, beautiful job, netting a beautiful 15.76%. So a couple winners in the books today is always nice. Basically, one of the reasons why we covered oil is you made a new low on the WTI, which you took out this low over here. It's looking likely that you're going to make a new low on a closing basis. You have had a pretty sharp move from 100 all the way down to 87, and you're approaching this major support zone of 85. I did say I wanted to potentially get out maybe a little bit before the 85 level because I know a lot of people are sitting there. And then simply when you look at this new parallel channel that I was eyeing up, so you have this pivot to this pivot, and now you have this pivot to this pivot to this pivot, and you just tag that today. So naturally you are into some support. What I think could potentially happen is we get a short-term bounce back up to this 93 level. That should coincide with this major support zone right here, which is your previous pivot zones that you were consolidating on before you broke down. And it would also retrace to this major low pivot over here. So if we get a potential retrace there, I may look to accumulate a little bit more of a short trade on SEO, because then we can potentially still squeeze out an additional, 8 times 2%, 16% on the trade. So I haven't quite yet decided. I have to wait to see the candle formations, but overall great job covering that oil short, and once again the energy trade has paid us handsomely. Let's take a look at natural gas. Natural gas inventories did come out today. There was a bigger build than expected. I think the market was expecting around 20 to 25 million billion cubic feet build, but there was actually a 44 billion cubic feet build. So clearly with a build, you would naturally assume the price action to head lower right off the hop, but that wasn't really the case. It is slightly down on the day, but it actually got a rally on that, so which could be a short-term signal that people are still pricing in more fear in regards to Europe getting closer to the winter, and they do rely heavily dependent on natural gas energy. So again, there is the potential that natural gas can continue to float up. I'm not yet ready to short it at this point. However, if we do get a meaningful retrace of this topping tail, I'll start to look to accumulate definitely a short. Even if you flip to the weekly, you didn't really get a meaningful retrace of at least 50% of this weekly topping tail. So potentially I would like to see us start to retrace around to the 875, 880 level before I start accumulating another natural gas short. I do think natural gas will head lower over time, but nonetheless, I would like to see a potential move higher before I'm comfortable accumulating that short position again. So let's just flip back to the S&P to see how we are doing. So overall, if we flip to the intraday chart, you can see that we're still trying to hold that wedge pattern. If I simply draw that in, let me change the color. So if we simply draw in this wedge pattern, you still are fighting this wedge pattern over here, where you had your fake out breakout, and now it looks to be you're just holding support. But in my opinion, I do think we see a break lower just due to the fact that you failed to break out over here. So let's continue to monitor this. There is tons of earnings. The two positions that we're in is Monster and Vertex Pharmaceuticals, so I will be watching those after the bell. And I do think Vertex Pharmaceuticals is actually primed on the daily chart. Let's just take a look at our position here. So VRTX Pharmaceuticals is actually putting in this nasty kind of daily bearish consolidation. So this is favoring a potential move down on earnings. You can see its last earnings reports were roughly in the same position that we were trading in, right around here. And after earnings, it had a miss and it fell a good 11 to 12%. So I'm hopeful based off of this chart price action, since you are making another lower low over here compared to over here, and you are putting in a little bit of this daily bearish consolidation. And the interesting thing is it's right underneath, all this consolidation is happening right underneath the 50-day moving average. So you've tried recapturing that 50-day moving average now once, twice, 3 times, and you failed, which shows sellers are lurking, and that is a short-term relative weakness signal for Vertex Pharmaceuticals. So Monster Beverage has actually had a couple days of sell-side action. This one is still technically, I think due to the fact that it's still at the highs of its chart, I do think it has a lot more room to disappoint than for it to pop higher. You know, we don't have a full position yet on it, but nevertheless, we would like to see this potentially cave in. I still don't really have many signals other than this major double top resistance area that I do think we have to see a pullback before we can start to challenge and get through that area. In the event that it goes higher, I'll probably start to look to accumulate anything around another add position around 103 or above. So we'll just continue to stay alert and stay tuned for that type of price action. But let's just see, earnings can shake things up pretty substantially. We have a lot of the meme stocks like AMC reporting, Carvana, so it'll be interesting to see how that type of price action plays out. That's it for today. Hope you all enjoy this analysis. Please give this video a big like and comment down below, and thank you all for being members.